Hello and welcome to the session. Finance and Accounting LO4. Be able to prepare a budget. Do you know how budgets can transform financial management? This video explores various budgeting techniques and their impact on financial planning. Discover how different budget types can guide businesses and individuals in achieving their financial goals. A budget is a financial plan outlining projected income and expenses. It helps allocate resources to meet financial goals. Budgets can be monthly, quarterly, or yearly. They provide a framework for managing finances effectively. By setting targets, budgets help in informed decision-making. Budgets serve as a roadmap for managing personal finances. They guide spending, saving, and debt management. Organizations use comprehensive budgets covering revenue and expenses. They include capital and marketing expenditures. Budgets support strategic decision-making and financial stability. They involve various departments and activities. A well-designed budget aids in planning for growth. Budgeting involves planning, control, and communication. It coordinates business efforts towards common goals. Budgets evaluate managerial performance and motivate efficiency. They authorize expenditures and delegate responsibilities. Effective budgeting is crucial for business success. Different budgets serve various purposes. Operating budgets focus on daily operations. Cash flow budgets project inflows and outflows. Financial budgets provide a financial health overview. Master budgets offer a comprehensive business overview. Operating budgets include revenue and expense forecasts. They focus on day-to-day business operations. This budget helps in managing routine financial activities. It projects sales, costs, and profits. Operating budgets are essential for operational efficiency. This is a main call-out for this scene. Cash flow budgets project cash inflows and outflows. They ensure sufficient liquidity for obligations. This budget helps manage cash resources effectively. It prevents cash shortages and supports financial stability. Cash flow management is vital for business continuity. Financial budgets include cash flow and balance sheet projections. They provide an overview of financial health. This budget covers expected assets, liabilities, and equity. It guides strategic financial decisions. Financial budgets are crucial for long-term planning. Master budgets compile all lower-level budgets. They provide a comprehensive financial overview. This budget includes cash flow and financial statements. It supports overall business strategy. Master budgets ensure alignment with corporate goals. Static budgets are fixed and do not change with activity levels. Flexible budgets adjust based on actual performance. They provide accurate benchmarks for comparison. Flexible budgets offer better control over costs. These budgets adapt to business dynamics. Capital budgets outline spending for large projects. They include investments in equipment and facilities. This budget prioritizes projects based on resources. It supports strategic growth and development. Capital budgets ensure efficient allocation of funds. This is a main call-out for this scene. It brings into focus the core idea being discussed. Zero-based budgeting reviews all expenditures. Each cost must be justified for the new period. It starts from a zero base, analyzing needs and costs. This approach ensures efficient resource allocation. Zero-based budgeting supports cost control and efficiency. Incremental budgeting starts with the previous period's budget. It adjusts for inflation and known changes. This approach suits stable businesses with predictable costs. It relies on historical data for planning. Incremental budgeting simplifies the budgeting process. Rolling budgets are continuously updated. They add new periods as old ones expire. This approach suits dynamic environments with uncertain forecasts. It ensures budgets remain relevant and accurate. Rolling budgets support adaptive financial planning. Activity-based budgeting calculates the full production cost. It identifies cost drivers for each activity. This approach provides accurate cost allocation. It supports complex product environments. Activity-based budgeting enhances financial accuracy. Preparing budgets involves gathering historical data. It requires estimating future costs and revenues. Strategic decisions guide resource allocation. Budgets support financial planning and stability. Effective preparation ensures business success. An operating budget includes revenue projections. It estimates costs of goods sold and gross margin. Operating expenses cover salaries, rent, and utilities. The budget calculates operating profit. This example illustrates the budgeting process. A cash flow budget projects inflows and outflows. It calculates net cash flow for financial planning. Cash inflows include sales and loans. Outflows cover expenses and debt payments. This example demonstrates effective cash management. A capital expenditure budget outlines project costs. It identifies and prioritizes investments. Resources are allocated based on project importance. This budget supports strategic growth initiatives. The example highlights efficient capital planning. Zero-based budgeting justifies each cost. It evaluates the necessity of expenses. Resources are allocated based on cost importance. This approach ensures efficient spending. The example illustrates comprehensive cost analysis. In conclusion, preparing a budget is a fundamental aspect of effective financial management. A budget helps organizations plan income and expenditure, allocate resources efficiently, and monitor financial performance against set targets. By preparing accurate and realistic budgets, businesses can control costs, support decision-making, and plan for future activities. The ability to prepare a budget contributes to financial stability, improved performance, and achievement of organizational objectives. Thank you for watching this video. If you have any questions, please feel to contact us via email or WhatsApp at 07484361688.